All right, ladies and gentlemen, we're going to get started here, and we're going to talk about how to self-direct your IRA into real estate tonight. Quick disclaimer, this is not a solicitation for clients. Hold on one second. Okay. So, quick disclaimer, not a solicitation for funds, not legal advice or tax advice. We're going to talk about how to take your IRA self-directed into real estate. Tonight, we're going to talk about how it's done and what it costs and how we can move that capital into real estate here in New Jersey, apartment buildings that we manage for our investors who enjoy all the benefits of real estate. So our mission is to transform personal finances and quality of life by creating passive income streams through real estate investments. The moment you make passive income and portfolio income part of your life will change. Robert Kiyosaki, I read Rich Dad, Poor Dad 10 years ago or so, and that sparked my passion for real estate. And I ended up working with Seth Martinez, who's there to the left. And we started People's Capital Group in 2013. And Seth had sold a medical billing company, and I was actually his realtor, and he presented a lot of lowball offers. No other realtors wanted to work with him, but I enjoyed it, and he's really good at the management into the business. He's very good at project management and construction and property management, analyzing buildings, as am I as well. But I'm more in charge of investor relationships, branding, marketing, and also analyzing buildings that come in and working with new opportunities. I was trying to find a good deal. The hardest part of our job is finding a good deal. But we've done about 250 transactions together, Seth and I. We've wholesaled real estate, over 100 transactions of wholesaling. We have fixed and flipped over 50 houses. We've quickly built up a portfolio of about 100 units and recently sold about 30 of them, and now we're buying about 36 more. So we focus on buying medium to mid-size, small to medium apartment size apartment buildings in New Jersey within an hour of Manhattan. The agenda tonight: why do people invest in apartment buildings in New Jersey? Why do they prefer syndicate investing? Why do people value PC service? We've created a turnkey service for investors here where they can take advantage of really well cherry-picked properties. And we'll talk about how we analyze those properties, how we pull together capital to create a syndication, what syndication investing is. But first, why New Jersey? So we really like the New Jersey market. Not only do we manage all of our real estate in-house here, so we want to be within an hour of all of our properties, but New Jersey's had a lot of growth in rents, in market values. There's a lot of skilled workers here, high household income, and also a very well-educated workforce. The state is home to over 20 Fortune 500 companies, number one drugs, pharmaceuticals. So, a lot of capital here, a lot of inventory, a lot of buildings, and there's a huge demand to travel in and commute into Manhattan, and there really will be for the foreseeable future. So we buy real estate in North Jersey, around Manhattan, but not in Manhattan. So we buy in Newark, lot, Patterson, and we make good returns in inner city areas, Jersey City. And these cities allow us to get good cash flow in the apartment buildings with high demand to live near Manhattan, to be able to commute to Manhattan, but not pay the cost that would cost of Manhattan. So we work with investors who use their IRA, and they self-direct their IRA into real estate. They move their IRA from wherever it is, say Merrill Lynch right now, and they pick a custodian, an IRA custodian to work with, and they self-direct their IRA into that custodian account. Okay, there's tons of different companies that act as IRA custodians, and you can choose what to do with your IRA from that point. There are certain rules and regulations. You can't pay yourself early, but you can invest in certain assets such as a LLC we set up for investors to own a piece of, and with their IRA, they can own a part of that LLC and take advantage of the benefits of the real estate that that LLC owns, okay, like an apartment building that pays cash flow. So people want the legal tax shelters and predictable investment returns that are found, with owning apartment buildings in areas with high demand outside of Manhattan on the Jersey side. They want low risk investments, and by pulling together investors, we spread the risk, spread the rental risk there, and we spread the investment risk. And with more rental units, you have more tenants paying in, okay, less vacancies. So it's better to buy a 25 or 50 unit property and put in an investment and own a small share of that building than to own all of a 2-family or a 3-family. If you lose one tenant on a 2-family, you lose half your income, you can't pay your mortgage, the building will spiral out of control. So you want to own big buildings. It's better to work with professionals and invest in areas that are always going to hold demand, such as the North Jersey market with easy commutes into New York City. So also well-managed apartment buildings. So we own our own management company. We're focused on managing our own buildings. So whether there's good times or bad, we feel our buildings are recession-proof by buying middle-of-the-road properties that working class individuals can afford. We focus on B and C buildings. There's A, B, C, and D. Okay, A gets hit hard in a recession, D gets hit hard in a recession, but you want the middle of the properties, B and C. And right now we're buying a Class B property, for example, a 25 unit in Paterson, New Jersey, where you can walk down the street, get on the bus, and be in Manhattan in 45 minutes. Okay. The demand, though, for that area, we keep the rents at a price. The rents are so low as comparable to other cities that really the rents have a lot of room to grow. And we find the demand is just really through the roof for our rental units in inner city areas here in North Jersey. So these properties allow tax depreciation, other benefits. Now, with your IRAs, the tax benefits are kind of a wash through, so we won't talk too much about the tax depreciation of real estate tonight. But that is one of the benefits at the end of the day. So people want legal tax shelters, predictable investment returns. With the cash flow of these apartment buildings, the returns are more predictable. The buy, renovate, refinance strategy allows our investors to get a big lump sum of cash at a predictable time and be able to fund important occasions in life, weddings, college, vacation, spend more time with your family. And also, we personally guarantee the mortgage. So Seth Martinez and I, we will personally guarantee the mortgage, so we get good terms on the mortgage. Right now we're getting a 3.75 on this 25 unit we're buying in downtown Paterson. And we'll personally guarantee that mortgage so we get a really good term on it. And that allows our investors to avoid having to take that risk. So we'll take that risk. We'll personally guarantee it. People self-direct their IRA into the building, own a share of that apartment building. And since we have so many units, it shares the risk. With more units paying in, owning a larger apartment building, you're better off than owning a single family home or a 2 or a 3 family unit. You really make a lot more with a bigger building, even if you own a smaller share of it. It's more consistent income, safer income. Ideal in New Jersey apartment buildings, easy commutes to the cities. We were saying we have a lot of demand for our units. We focused on buying properties that are near commutes, easy commutes to New York City, center of town. We've made very good returns in downtown Newark and Paterson through the years, and we also have done well in Jersey City. So we focus on these areas that are up and coming, and we've worked with all types of individuals to really turn around properties and just make better returns for our investors by buying mismanaged apartment buildings and making them better managed and more desirable places to live, where people will pay more money to live there. So the reason people prefer syndicate investing is because, as we were saying before, it spreads out the risk. Our investors get quarterly passive income checks while the property is professionally managed by our management company. We have a nice exit strategy at each refinance where the investor can exit the investment by selling their share in the LLC, but also enjoying a large lump sum upon the refinance and cash flow. And by focusing on larger buildings, you're shifting the risk. You're also shifting, using the expert knowledge Seth and I have with our management company, with Lena, over 30 years of real estate investment experience. So we find the right property and manage it properly with a 15-year value add strategy. So the investors do not have to use their time to manage the property as well. We take care of everything from A to Z. So our investors get quarterly cash flow checks, financials, detailed information every month with a monthly update. And it's a completely turnkey passive investment for our investors. So they get mailbox money. We find mismanaged apartment buildings. We force appreciation into it by getting better net cash flow, okay, by getting our expenses down and finding more ways to make income on the property by increasing rents and finding other ways to make income like storage in the basement or laundry. We find we can increase the value of the real estate exponentially by increasing the net cash flow. And that allows us to refinance the building over a period of time, 3 to 5 years, where our investors can split up a large lump sum of cash. And if you're using your IRA to invest in this apartment building, then you get that cash tax-free, whether you exit the investment or not. It's tax deferred, actually is the term. And if you stay invested long-term, it's a great tax strategy, as we plan to do the 1031 tax deference eventually down the road and trade into a larger building. Talk about that in a second. But essentially, we do a lot of work behind the scenes to find a really great building. So the first part of this job is looking at over 400 properties to bring our investors one great deal. We'll spend up to $10,000 a month to find these properties and bring our investors one every 3 to 4 months is our goal. And we have over 10,000 investors in our network. Some buy properties from us, some just come to our events. We have a real estate networking event called New Jersey Real Estate Network with over 3,500 members on meetup.com. That allows us to work with passive investors consistently for over 10 years. So we've done over 250 properties together, Seth and I. Seth's in charge of operations. I'm more in charge of investor relationships and branding. We have a $10 million asset right now. We're taking on about $4 million more in real estate in the next 30 to 60 days. And we've got 75 units. We just sold about 30 units. So we take on the risk of repaying the banks by personally guaranteeing the mortgage. That ensures that we're hyper motivated to hit the mark on our cash flow projections, hit the mark on our reposition strategy and our refinance strategy. Okay, we have an aggressive calculating business model to make sure that our IRA investors who self-direct their IRA into real estate have the option. Okay, you can take your IRA and move it to a custodian. You can then invest in an apartment building with People's Capital Group here. And we're going to talk about that in more depth in one second here. So with $10,000 a month invested in marketing, we cherry pick the property, 400 properties to pick one where there's forced value add opportunity. The building's mismanaged. It needs some work. They have to raise the rents. We have to figure out different ways to make it a better place to live, safer, smell better, well managed, answer the tenants' calls when problems come in, and make the building in a place where families feel comfortable living. In turn, individuals will pay more to live there, and the rents can be raised consistently on the building, which allows for greater and greater returns to our investors. So by managing the buildings better and pulling together capital from investors that shares the risk amongst many investors, and Seth and I will personally guarantee the loan as well, but then the investors enjoy the passive income streams from the property as we manage the building and allow an exit strategy every 3 to 5 years for refinance. So once we increase the cash flow on the building, that increases the property value. Increase the property value, increase the equity, increase the cash from the refinance. Get more cash from refinance, it's more tax-free income to investors. More tax-free income to investors is better ROI. Okay, so the aggressive and successful repositioning track record we've had together, Seth and I, the last 10 years, allows investors to feel confident investing with us time and time again. And right now we've got a pool of a little over 30 investors that we work with and about 15 new investors coming on with this next building that we're very excited about. We also have a calculated construction costs to stay on budget. We've been working with a lot of different contractors for years. We really keep our costs low so that our IRA investors and all of our investors can enjoy really nice cash flow on these buildings. The less you spend on construction and upkeep of the building, you want to keep a nice, good building that's well maintained, but you also want to keep those costs low when you're working with those contractors and stay on budget and stay on time with those renovations. So we manage only our properties. We're laser focused on them so our investors can earn consistent cash flow with an exit strategy upon the refinance. So every 3 to 5 years, after forcing value into the building by getting better net cash flow from the building, the more the money the building makes, the more money the building is worth. Therefore, we go to refinance the building after 3 to 5 years of forcing value into the building, and investors have two options to either stay invested in the LLC, which is a great tax strategy, continue to earn cash flow quarterly, monthly updates, quarterly financials, get a big lump sum upon the refinance every again at year 9 to 10, and then we go to 1031 into a larger building where we sell this building and trade into a larger building a certain amount of time, and those investors will now own a share of a larger building, so it allows them to just consistently build their investment over time. So that's the ultimate strategy with these investments, the 1031 into a larger building, defer all taxes, and just make incredible returns over time by deferring all taxes. It's really a great tax strategy, the 1031 tax deference, okay? And complemented with your IRA, this investment can just be the investment that keeps on growing and growing over time. You can also sell your share in the LLC. You can exit the investment every 3 to 5 years, get back your initial investment, keep the cash flow, keep the money you made from the refinance. And if you're using your IRA, that's tax deferred earnings. So that's really great that you don't have to pay tax on the returns you make in the property. Our investors on our last investment made about 11.5% cash on cash annualized returns. So that's a really strong return. And using their IRA, some of them did, some of them didn't, but the ones that did, of course, we did sell that building. Actually, they were able to avoid paying tax on that. So that's great. The other investors, actually, their biggest complaint was the amount of tax they had to pay. We sold the building. So going forward, we tend to refinance buildings. That was on a 25-unit. So why do people value PCG service? The power of syndicate investing. So again, we'll pool together capital. Syndicate investing enables a group of people to pool resources for better properties. So far, about $5.5 million has been pooled to date. We're working also on closing on a couple buildings right now. We have another about almost $2 million pooled as well for these new acquisitions coming in Patterson, New Jersey. 2 new buildings we're buying, so we're very excited about that. Still have a couple spots for investors, so you can email us if you want to learn more about that. Qualified investors show they simply have a minimum of $30,000 to invest and able to commit to a 3 to 5 year period. So we make it easy to invest. We work with investors who have over $1 million with us. We also work with investors who have as little as $30,000 self-directed from their IRA. Okay, you can take your 401k, you can direct it into a IRA and then move it to an IRA custodian to self-directed into real estate. Okay, so we'll evaluate investors, make sure they're a good fit with us. We work with over 30 investors right now. About a third of them work with their IRA. The barrier to entry is low because the bank loan, we get the bank loan, Seth and I, so therefore the investors come in with a down payment and it limits their investment and allows them to leverage their IRA in the real estate system and make better returns by leveraging their investment. Seth and I get the bank loan. Okay, so here's our approach. This is just an example of a smaller building that we bought a little while ago, but just a very good area, good return. And this allowed us to just make continuous cash flow and get our money back multiple times over, really. So we bought it for $110,000. They were asking me $130,000. So right off the bat, we got $20,000 in equity. So our job is to always get a good discounted price. Normally, we're buying larger buildings in this, but this is a good example here. Good area right around Rutgers University in Newark, New Jersey. We put about $30,000 into it, and then it was appraised for about $310,000 just 1 year later. So we refinanced it. It appraised for $310,000. A year later, we pulled out 70% of that. So we got back our initial investment plus a lump sum of cash. Okay, and the structure we had of the investor at that time was that his equity split would change after the refinance. And we have different equity splits now with our investors, but the equity split went to 20-80 after that. The investor owning 20, us owning 80% here at PCG. And then we refinanced again, actually down the road, and in 2017 as well. And the investor was reimbursed, over 100% of their money, plus tons of profit by that time as well with the cash flow. So just really phenomenal investment. The investor to this day still earns cash flow in the building. So just goes to show, when you refinance a building in this space of time twice over just, a few years, that's pretty quick. But you buy in the right areas, the values keep going up and up and up. And the return, the rent keeps going up and up and up as well. So just a good example of a building bought in the right area around Rutgers University, Newark, New Jersey, at the right time. We try to do that now. We're focusing now in certain very small pockets of Patterson where we see a lot of development going in, a lot of high-end development going in. We saw it happen in Newark in the last 10 years, and we are seeing it happen right now already in Patterson. So that's where we're very bullish right now with a number of buildings. And here's an example of a 25 unit. We had a few investors invest with us on, some of them using their IRA that they self-directed to this investment. And they were asking 1.2 million. We bought it for 1,075,000. So we got a great $125,000 discount off the appraisal value. It appraised at 1.2. And this is a tough building because it was actually the town inspector who owned it. He was the seller. The seller was the town inspector, and he really wasn't happy after the sale. I mean, it appraised at 1.2. We bought it for 1,075,000. So I guess he thought we got a great price on it, but that's our job, is to get a good price so our investors make great returns upon the refinance. And got a bank loan on it for 75%. Second, I personally guaranteed it, and we had 4 investors come with $100,000 each. It's not always that clean. We have different investors at different levels, of course, but the investors own 60% of the LLC, and then PCG owned 40%. And we ended up selling the property. One of the reasons was, one of the challenges was the town inspector. One time our tenants put a TV on the corner, and the town inspector fined us $11,000. So just a really tough guy, tough situation. Don't tick off the town inspector. You end up paying for it. So we learned that the hard way. But we did very well on the investment. We repositioned the property. We made it earn more money. We increased the rents. We improved the units. The building was a more desirable place to live. It made more cash flow, and therefore it was worth more money. So we sold it for a nice profit of 26% over about 2.5 years, and our investors walked away with about 11% plus cash on cash returns there. So you invest $10, you make $1. That's a 10% cash on cash return. So our investors earn about 11% annualized cash on cash return in the scenario. We predicted about a 9.5. We hit over an 11. So we really try to underpromise and overdeliver when we are working with investors. So let's talk about the IRA portion here. So investors can invest with their IRA. They can self-direct your IRA into real estate. So the way that works is, let's say you have your IRA right now with an index fund, and it may have just dropped over 1,000 points. The Dow Jones dropped over 1,000 points. Hopefully your IRA didn't. Hopefully you're well diversified, or you're just tired of this volatility and you want to move it into real estate where you get nice quarterly cash flow checks with people's capital group. So you can call up an IRA custodian. There's tons of them out there. You can work with New Direction IRA. We work with them many times. In fact, we can even send you a link that if you go through that, or we can talk to Alan there, and he'll waive the sign-up fee, which is like $50. So you can also work in Next Generation. You can work in Equity Trust. There's tons of them out there. Do a little homework, find the right IRA custodian for you. They all charge around the same amount. Obviously, little different fees here and there, but overall, it'll probably cost you about $300 to $500 to self-direct your IRA into a custodian. Okay. Now, once your IRA is with the custodian, at that point, you have a few options, okay? There's rules and regulations what you can and can't do with your IRA. You can't pay yourself early. You can't take your family on vacation. You can't put your kids through college, but you can do certain things. You can invest in a fix and flip, and you can try to fix and flip real estate. You can invest in an apartment building with people's capital group and get passive cash flow checks and lump sums upon the refinance. You can do a couple different things. You can invest in both those things. Now, let's say you can also invest in your uncle's ideas for a business, okay, or your brother's idea for a business, okay. You can't give it to your children. You can't give it to your parents, okay. There's things you can and can't do, and your IRA custodian will guide you on that. Now, let's say though you do want to go flip a house with this money and you want to be active with the money, and you're going to need the money very regularly because you're going to have to pay the contractors and you're going to need those checks quick, and contractors do not like waiting for their checks. So if that's the case, then you're going to want to go ahead and take another step, and you're going to want to start an LLC, okay, that's owned by your IRA, and it can be managed by you. You can't pay yourself a management fee. You can't buy an income property and live there for free, or put your kid there for free. You know, and there's certain rules, regulations, but you can go flip a house, or you can go take half of your IRA and flip a house, and take the other half of your IRA and put it into a passive investment in People's Capital Group, where you're going to get consistent double-digit cash and cash return. But the other half you want to be more active with. You want to go flip a house. You want to go buy a two-family and see what being a property manager is like. And so that's fine. You could go do that, and then at that point you're going to start that LLC that's going to be owned by your IRA and managed by you. That's going to allow you to get access to that money much more quickly. But now it's up to you to do the right things with that money, and really, your IRA custodian's out of the picture at that point. So that's called a checkbook IRA LLC account. It's been called, and different names for it. So in that case, though, if you start that LLC, it is an extra cost, owning an LLC and everything. There are some small filing fees and, whatever tax fees and whatnot. But that can allow you to get access to your IRA more quickly, more regularly, if you want to be more active with your IRA. Now, if you want to just invest with People's Capital Group, as we just discussed, and we buy a local apartment building and we manage it with our management company, and we send quarterly cash flow checks to our investors with detailed financials and monthly updates, then you can do that. And there's no need to go ahead and start that LLC, because you're really not going to need access to the money quickly or regularly. You're just going to review the operating agreement and the offering memorandum and execute the operating agreement, and your IRA custodian is going to review both documents as well and execute them as well, actually. And at that point, the funds are going to be sent from the IRA custodian to the title company, and the real estate's going to be bought then in the next few weeks. And at that point, your IRA owns a share of that property, a share of that LLC that owns the property. So it gets, passive cash flow checks every quarter, or a big check on the refinance. So you're not going to need access to the money more than once. You're moving it once, and then we're sending you checks every quarter. So at that point, there's no need to start that extra LLC and take that filing fee every year and whatnot, and deal with the extra tax headache of it. So I would suggest you just move your IRA to a custodian, and then move it into a passive investment with People's Capital Group, if that's what you want to do. If you want to be active with the money, then go ahead and start that LLC that's going to be owned by your IRA, managed by you. You're going to have to really follow the rules and regulations on what to do here, and your IRA custodian will guide you a little bit. But let me offer you something that we've paid lots of money for. It's like operating agreement for that LLC that you're going to start to self-direct your IRA into. Okay, let's say you want access to that money more quickly, you want to be more active with it, and let's say you want to do two things with it. So maybe you have $200,000 in your IRA, and you're going to self-direct it. Okay, you're going to pick out a custodian, hire that custodian, move it to the custodian. Okay, Next Generation Trust, and then Next Generation Trust is going to take that money and move it to an LLC that you've started, that's owned by your IRA, managed by you, and will give you an operating agreement for that LLC. Okay, and this operating agreement has been reviewed by attorneys and whatnot, and IRA custodians, and basically it allows you to operate this LLC. It tells you what you can and can't do. Okay, you may want to have your attorney also review it, or your IRA custodian will definitely review it. And basically, it's an operating agreement for an LLC that is structured for a self-directed IRA. So it goes over what you can and can't do with that IRA in the operating agreement, and it's set up for a single person managed LLC. So you can put yourself as the manager, and then ideally you have full control of your IRA. Now there's rules you have to follow, but if you follow the rules, then you can go ahead and make better returns in your IRA. Now you can take 100,000 of that 200, you can put it into an apartment building in People's Capital Group and earn a nice 10 to 11% return on it, year over year there consistently. And then you take the other 100 and maybe do something more risky, more active. Go, fix and flip that ugly house down the street you always wanted to do, and hire your brother who's a contractor, and more power to you. Get that American dream. So we have a lot of investors that do that, and that's great. A lot of them do go fix and flip houses or buy 2s and 3 families and try to make the same cash flow that we'll make on a 25 unit, and actually come back after some years and say, actually make more money investing passively with your larger apartment buildings than I do owning a 2-family or 3-family or flipping houses, because you might make money one day flipping houses, but you lose on another flip. So there's challenge with that as well. So anyway, at the end of the day, we can connect you with an IRA custodian. Your IRA will get redirected into a share of a PG apartment building if that's what you want to do. We'll review an operating agreement, review an offering memorandum. This has all the information about a building that we're buying, and about a third of our investors are people who self-direct their IRA into these buildings and then enjoy all the benefits of them, such as cash flow and a big lump sum upon the refinance. So we'll help you coordinate with the IRA custodian. At the end of the year, our CPA coordinates with your CPA to make sure taxes are filed properly, and the IRA custodian and whatnot is involved in that as well. And that allows tax time to be very painless. We make sure the whole process, getting started investing with us, to enjoying the cash flow of it and the updates, to tax time, we make all this as easy as possible. Here's an example of a high-income investor who might be earning stock dividends that are similar to earning cash flow on our buildings. The difference is, though, stock dividends are taxed, where cash flow is deducted with tax depreciation. So tax depreciation from the building allows you to write off that cash flow. Now, if you're using your IRA, you don't pay tax on that cash flow anyway, but the tax depreciation does help you avoid other possible taxes, such as UBIT and other things that your IRA custodian can talk to you about. Okay, long terms are less predictable with stocks. We do find that our buildings are more recession resilient. Okay, we work with active real estate investors who are actively flipping houses or actively owning real estate and managing their real estate. Maybe they're tired of managing their real estate and they want to sell some buildings in 1031. And with us, we're creating an opportunity to do that with a Delaware State Trust. And we're actually working on that right now with some investors and some attorneys to create that trust and allow investors at 1031 into a building with us. That's down the road. But if you're an active real estate investor, you can self-direct your IRA or you can invest with us. But it's better normally investing in bigger buildings where we do the work. We can enjoy the quarterly cash flow and the passive income from it. We work with a lot of active investors to say, wow, you guys actually make better returns than I did on my 2s and 3 families, and I don't have to do the work. So that's a really nice deal. So we work with IRA investors a lot, about a third of our IRA investors, and we really feel that our investments are recession resilient. Okay, they are less recession vulnerable than the stock market. The stock market just dropped over 1,000 points in the Dow Jones because of the coronavirus, right? Of course, so that's a major issue right now that's affecting the world markets. And if you own real estate, if you owned this part of this 25 unit in downtown Patterson with a nice turnkey rent roll coming in, and happy tenants that are understanding rents are going up with a nice, well-managed building, it doesn't really matter if the stock market's doing this or that. For the most part, people need to pay their rent. This isn't the best real estate in the block. It's not the worst real estate in town. We buy middle of the road, Class B and Class C properties where people need to pay their rent, whether the markets are up or down. So we really feel like as the stock market corrects itself, it's not really if, but it's when. I mean, the stock market's had a great run, so it's going to correct itself over time and then bounce back and whatnot. But real estate is more consistent, especially with well-managed buildings and larger commercial real estate. So the other benefit of investing your IRA in buildings with us is we put it into inner city areas in New Jersey, and you can see the tangible effects of your IRA actually improving inner city areas. We've done a lot in Newark, New Jersey. We've done a lot in Patterson. We've done a lot in Jersey City. These are inner city areas that have really transformed, and your IRA can help do that. So that's really cool. If you live locally here, these properties, people really enjoy that. I enjoy that too. turning around these buildings, making it a better place to live, and in turn, doing your small piece for that city and making it a more desirable city to live in. And also making returns doing it, making wealth doing it. There's nothing wrong with that. So we work with over 30 investors, many of them repeat investors. We try to buy a building every 3 to 4 months. We're closing on a building now in the next 30 days. So if you do want to put your IRA to work, you can get started investing with People's Capital Group in the next 30 days. The first step is to connect with us. You need to send us an email at info@peoplescapitalgroup.com, or you can go to our website at peoplescapitalgroup.com, put your information in. But it's faster if you email us, respond to the emails you've been getting for this webinar. Okay, you can respond to the meetup emails or the Zoom emails, and you should get that. So you can also email us at info@peoplescapitalgroup.com. And once we connect with you, we're going to send you a qualification form. You have to fill this form out. You have to qualify. We do work with accredited and sophisticated investors. Okay, so we work with non-accredited investors as well. So if you have the minimum investment of $30,000 and you understand the investment opportunity, which we're going to sit down and work with you to explain, and you review the operating agreement perhaps with your attorney as well, and then you would qualify as a sophisticated investor, someone that has the minimum investment amount, understands the investment opportunity, and has some experience in the asset class as well. So we can work with really any type of investor that has a minimum investment amount. We can also work with accredited investors. We have investors with over $1 million with us, partially IRA, partially cash. So we work with investors all through the spectrum to self-direct their IRA into real estate and get better returns. So if you want to start making stronger returns for your IRA, email us right now at info@peoplescapitalgroup.com. I will send you the qualification form to fill out, get qualified. We have a couple spots left on this next building. We're going to close out the opportunity in about 3 to 4 days right now, because we're basically filling up with so many investors. So we have too many investors now, but I do want to work with new investors here. So we're really trying to just focus on working with new investors for this building. So email us tonight at info@peoplescapitalgroup.com. We'll send you that qualification form. We'll get your IRA working harder in real estate, start making consistent returns with these apartment buildings in North Jersey. And the first step is emailing us to get qualified. So I look forward to working with you. If you have any questions, you can write them in the chat here or email us as well. I'll leave this up for a few more minutes. Enjoy your night.